Hello traders, Nick Shaheen here looking at Airbnb because somebody asked nicely in the comment of another video I made. Alright, so I will make this one relatively short because there aren't much fundamentals to discuss. The business model works. I used it this year. They were in shambles because of what happened last year. When nobody can go anywhere, there's no opportunity. We're going back to normal, kind of, hopefully without any hiccups. Therefore, long term, this is a viable business. It's not crazy expensive, but it's not cheap. I think 26 times sales currently. But again, the metrics are broken because of a disruption that was through no fault of their own, which means that we have to rely on the charts more so than anything. Okay, so before I forget, this YouTube channel is free, so subscribe to it and put the little bell dingy thingy so you can get alerts when I release videos. It's still free, the channel, so I'll try to contribute as much as I can, but I don't know how long that will last. So it did fall into support, but that was a must-hold support because it would have opened a portal to unknown. As it is running into resistance, which is a shortable resistance. And when I say shortable, it doesn't mean go out and short the stock. That's crazy in these days. But it means if I'm long, I fade it. Good trend. So the assumption is it will fail again, but if I'm wrong, then I should change my mind. So let me show you. I'll give you lines first. So Thursday's high, which was 150.5, that's the first hurdle because it was the hurdle before. If they fade a little bit, and today they're down 1% one day later, and then come back and take it out, then they have an inverse head and shoulders that could target 165, 168. Did you hear that? So that could be the trigger for that. However, in the way, there are more lines to pay attention to. 155 and change, in fact, 157 will get you, 158 almost will get you clear of that. This cluster, I want to clear this cluster, and if I do clear this cluster, I also clear the value area of the volume profile. If you don't know what that is, do some homework. It's just another magnet that's pulling it here, and if they get here above 157 or 158, they go clear of it, and then they have room to shoot up to the next battle killer zone. I call it killer zone because I bet you have lines. Okay, so this was a must hold zone, and they didn't, and look what happened. And if they get back to it, it's going to be hard to just burst through without really impressive headlines. Speaking of headlines, earnings are coming. Don't know what they're going to say, and more importantly, you don't know what the market will do with that news. You've seen this week, crappy reports get rallied, and good reports get puked. And good reports get puked and then rally, and bad reports get puked and get rallied. Therefore, there's no rhyme or reason as to how markets will react over the earnings report. So I'll put back the lines and I'll tell you what the trade is. These are my comments. I'm pretty consistent. Shortable with a tight stop, because if it's taken out, that's what these words say, they'll go to 165 or more. Down here, good entry with a tight stop, because if you're not, you're opening the door to unknown. Somewhere in the middle, it's pretty supportive. So trade the range until the range breaks out one way or another. All right, so that's my big picture on this guy. And of course, it needs the whole market's work to work. So markets have never been higher. They literally broke records this morning on good news that should have caused a sell-off. Crazy, nutty action. So a lot of question marks there. I'm not saying go out short the markets. I'm just saying there are question marks. The next Fed move is most definitely bearish. They told us so. It's a matter of time. Is it August? Is it September? Is it October? Is it 2022? 2021? What is it? Taper? How much is it? How fast they're going to finish the tapering cycle? Is it going to be 10 billion a month? So a bunch of questions. Therefore, caution is necessary. So whatever I think I know, I should knock it down a notch and stay safe. How can I be safe? The VIX just hit a low that has served as a bounce for a while. So that would make an easy blanket purchase to protect balance out a bullish portfolio. What do I mean by that? So this is the VIX, the quote fear index. All these tails down here is coming into that area. Of course, it can get lower. It used to be 12, 10, 11. The average is somewhere around 19. And did we lose risks from 3 or 4 days ago? Did they figure out everything that was messy 2 or 3 days ago? No. So just a thought, people. All right. Have a good weekend. Nick signing out.